Good morning, everyone. Once again, this is Blackforexgroup coming to you with another market analysis video and currency breakdown. This morning, we're going to be taking a look at the Great British Pound USD. But before we get started to break down this currency pair and what's happening on the chart, we have to state that this video is for economic purposes only. This is not financial advice, okay? But we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and that can help put some extra money in your pocket, especially during these very, very uncertain economic times. Okay. Now, before we get started to talk about what is physically happening on the chart, let us discuss what's happening with each currency's fundamentals, respectively, starting with the Great British Pound. Okay. Now, the British Pound has actually had some very positive news come out throughout this trading week. Okay, had some very positive news come out about its PMI and a lot of different economic news events was very positive. But a reason why you're still seeing a continuation of the weakening of the British pound, especially against the USD, is because of the dark clouds that hang over the UK and the entire European continent's economy in general. Now, even though the UK is not part of the EU, remember a few years ago they did Brexit, right? Which they exited the EU, right? But the EU still remains one of its closest trading partners. Okay, so its closest trading partner has been getting weakened and weakened and weakened by economic events that's being fueled by geopolitical events with that's affecting Europe. Okay, so with its closest economic partner being weak, it starts to get an inherent weakness as well too. Okay, now also the UK is suffering from high inflation and very high gas prices as well. Like everywhere and around the world, they're suffering from high inflation and high gas prices, but the UK and the European Union is getting hit a lot harder than all of the other respective first world countries or G8 nations. Okay. So, with that being said, we're seeing a continuation of the weakening of the British pound as well, along with that factor. Now, lastly, we have to talk about the entire destabilization of the European continent's economy associated with the Russian-Ukrainian war. Okay, because there's a lot of FUD surrounding the entire European continent's economy, which is fear, uncertainty, and doubt that this war may spill over to all of Europe and not just stay isolated between Russia and Ukraine. Okay. So, with that being said, we are seeing a weakening of the major three European continents' economies, which is the British pound, the euro, and the Swiss franc. Okay. So, as long as this war continues and geopolitics stay what they are, we're going to continue to see high gas prices in Europe. We're going to see further inflation happening in Europe and in the UK as well, right? Higher gas prices in the UK as well. Okay. And this is all going to eventually lead to an overall recession between UK and the European Union. Okay. All of Europe, including UK, whether it wants to be a part of the EU or not, its economics is making it part of it now. But we're eventually going to see an overall this inflation and high gas prices turn into full-blown recession within going into the summer. Okay. They're going to go in recession before America goes into recession. Okay. So, with that said, now let's discuss what's happening with the USD. Okay. Now, the USD is gaining a lot of strength and traction through this strength because we've had a lot of positive news come out with the USD. We've had more positive news than negative news come out about the USD, which is further increasing the USD strength as well. Then also on top of that, we're starting to see a lowering of the gas prices. Okay, the lowering of the gas prices is related to we seen an increase in oil in the circulating oil around the world. So as we seen the oil numbers increase, the oil per barrel price went down, which means that prices at the pumps went down, which means that put more money in consumers' pockets, which means that consumers were able to put more money into the economy. And being that shipping goods and shipping costs for business and companies don't have to pay such a high gas prices as well. They can start to somewhat lower the prices on consumer goods, which is also going to help with inflation as well, which is also going to bring a lot of strength to the economy and bring up the strength of the US dollar. Okay, so we got a lot of factors that's happening in the Forex market. We have economic events that's happening that's affecting Forex, along with geopolitics around the world that's affecting Forex. More so, the geopolitics is affecting Forex than actual economic indicators. But we got to be on top of all these things to be consistently successful and profitable traders. Okay. Well, that's why you guys are here, because you don't have to necessarily be on top of it. I'll be on top of it. Black Forex will be on top of it. And you just got to come here, listen, and watch the videos, and we'll give you all the information that you need to be a successful trader. Okay. So, not to worry, we stay on top of the research so we can take that headache away from you guys so you can focus on your everyday lives, your families, your friends, your children, and such, and still be able to make money profitably without becoming an economist. Okay. So, with all that said, now let's break down what's happening on the charts with between the British pound and the US dollar. Okay. Now, being that we said that the with the fundamentals that the Great British pound was continuing to get weak despite its good economic news that came out, and we've seen a strengthening of the US dollar. As we stated before, we did started to slide more outside of our range because price was bouncing between these two range points here, with this being the lower part of the range, this being the higher part of the range, this being the lower extreme part of the range, and this being the higher extreme part of the range. And as you can see, prices broke a little bit outside of that range around towards the higher extreme, and this one towards the lower extreme. And now, like as we said, and we said in videos, if the fundamentals continue as it was, that we were going to continue to slide out of this range, get into this general area here before we start to pick up inside this range. Okay. And this is due to that. The reason why you don't see a just total price drop is because we do have good economic news coming out about the British pound. It's just that the geopolitical events surrounding Europe and the UK as whole, between the sanctions, the war, the inflation, and the gas prices, are overshadowing these good events, and that's taking precedent more than the good economic indicators. So as long as that's still happening, we're going to see a continuation of the weakening of the British pound, and as the U.S. dollar continues to gain strength, we're going to see a dragging down of the price. Now, if we start to get poor economic news with with the Great British Pound, along with the overall dark clouds that's hanging over it, we're going to start to see more of a drastic drop in prices. It's going to come down very violently with a lot of momentum and a lot of velocity. Okay, but we're going to continue to see a slide down to possibly get to this general area here before we start to see an uptake in price and get back into our range. We can get is here or as high as here before we continue to go back down again. Now, if we break this down area and we start to go back down to this area and range out, then we can safely say that this new price point is going to be our lower extreme of our range. Okay? But as of right now, we're still here with it. Okay? So, for the short to intermediate term, we're gonna see some more short term selling and short positions going in. Then eventually we're going to see a pick up in price. This pickup in price has more so to do with retracement than fundamental price turnover. Okay, so we could get as high as this area here and this area here before we are going towards the downside. So the best thing to do is to wait for the retracement to come into this area here or here before placing your short position and continuing with the current trend of the sale. Okay. Now, is it possible we can get turn of price over and just start going here and then here and then here? Of course, it's possible. A lot of things are possible. But is it plausible? Is it probable? No, not really. For the most part, as long as geopolitics still stay the same and overshadows the economic indicators affecting the currencies, then we're going to see a continuation of a drop in price. As we're in this range, we're going to be making lower highs, and we're going to continue going to the downside while making lower lows. Okay? I hope this information was helpful for you guys. Happy trading.